Hello friends, James Stevenson back with another edition of James and Loki's Gems of the Week, a Patreon exclusive for you patrons who are supporting me. You get this video and the general public on YouTube does not. Feel privileged to be watching a video the proletariat cannot access. All right, let's check in on Loki. I mentioned Loki earlier. What's he up to right now? He is just resting in his bed with his eyes shut. But we have a good shot of him on the Loki cam. So I'll switch over to my desktop, and I have this queued up already to where we left off in last week's episode of James's Gems of the Week with a couple of tweets I liked from Martin Vieca and Viv, formerly known as Falcon Heavy. Her other account is Battle Angel Viv. So this tweet got a lot of love, rightfully so. Here's the next tweet I liked from Farzad Mizbahi. Thank you, James. Slowest train wreck in history. Let's see what Farzad is talking about here. Oh, this was my video last week on Ford, GM, and Tesla. So if you haven't seen that video, and you're interested in learning how to make stunning charts in Excel, Excel sure doesn't make it easy to do, but if you know enough formatting tricks, you can make charts that people will like to look at. The key is to not leave the default settings, because the default settings look like the default settings. They're instantly recognizable as not great, and people want to start looking away from your chart almost as soon as they've set eyes on it if you left all the default settings. So I like that tweet from Farzad. Next, a tweet from Not Financial Advice at CJ_NFA. Sometimes I just wish I could get James Stevenson to tell me stories about fluffy animals and beautiful landscapes so I can fall asleep in absolute peace. Yeah, I was trying to do my my best bedtime story voice reading that tweet. So I thought that was fun. It got a lot more likes than I would have guessed it might. So, hey, thank you if you appreciate the dulcet tones of my mellifluous voice. You're welcome. Hey, why ever you're here, I'm glad you're here. If you're here for me, if you're here for Tesla, if you're here for Loki, just glad you're here. Let me move this so I can get both of Loki's ears in the shot. There he is. Okay. The next tweet I liked came from Tesla. 20,000 Model Y built at Giga Texas to date. So a lot of happy folks at Giga Texas posing for a photo here, making 20,000 Model Ys so far. And as the ramp increases, they'll be making 20,000 a month before very long. It'll take them a while still. They're ramping. But yeah, that's the way ramps work. Every week you make more than you made the week before if everything goes well. Okay, next tweet from Sawyer Merritt that I liked. Something remarkable is happening that I don't see many outside the Tesla sphere talking about yet. Tesla is on track to likely deliver over 760,000 Model Ys this year, which will generate $50 billion in revenue, making it the highest revenue-generating vehicle in the world in 2022 for a single model. So this whole thread was great. Maybe I'll just show those to you real fast. Yeah, Model Y is becoming one of the best-selling vehicles in the world, and it's a luxury vehicle. Like, that title had previously been held by cars like the Toyota Camry, or Corolla, or Civic, I don't know, small cars that are very affordable, and, mass-produced is typically what would take the #1 spot for the most sold vehicle in the world. And Elon Musk predicted it. He was right. And yeah, Model Y, best-selling vehicle in the world. So I like that tweet and that thread from Sawyer, who obviously you should be following. Like, Sawyer Merritt is my first example of someone who ought to be verified by Twitter and isn't. He has 330,000 followers. If you worked at the Wall Street Journal as any reporter, or contributor for a month, your Twitter account is verified. You might not have 1,000 followers, but you have a verified Twitter account so long as you worked for a verified news organization, or if you're a human rights activist, you can get your account verified or whatever. But somebody like Sawyer Merritt can't get verified because he doesn't meet Twitter's qualifications for being verified. Very, very silly. So hopefully Elon will address that. Next, a tweet from Carl Quintanilla that I liked. A visual illustration of Tesla's head start via Morgan Stanley. Hashtag Tesla. Let's check out this chart here. That didn't make it a lot bigger, did it? So maybe I'll instead zoom in here and see if this does any better. It doesn't. Alright, so I'll just read it to you. This top line here is the Tesla Model Y. 97,642. The line right underneath it is the Tesla Model 3. Yeah. 66,482, I guess is what that says. Then the third place electric vehicle sold in the U.S. year-to-date 2022 is the Ford Mustang Mach-E, and they sold about 10,000 of them. This is a very eye-opening chart, right? That's the third place. So recapping, about 100,000 of the number one vehicle sold, about 66,000 of the number two vehicle sold, about 10,000 for the number three vehicle sold. And then you've got, Hyundai Ioniq. Oh, here, look, Tesla Model X is the fifth. The fifth place vehicle starts at $120,000 and is Tesla's big Model X SUV with falcon wing doors and all the crazy Easter eggs. Kia EV6. Tesla Model S is here in seventh place. So all four Teslas are among the top 7 electric vehicles sold in the US. And then below those, like, I couldn't have told you that Toyota RAV4 Prime even was a vehicle that you could buy that was electric. Nissan Leaf, the venerable Nissan Leaf, they sold 5,000 so far this year in the US. Think about Tesla ramping up production past, 2,000 vehicles a week in Austin and Berlin. Nissan, this year in the US, has sold about 5,000 Leafs. Kia Niro EV, often held up as, one of the best EV alternatives. They've sold 4,000 of them this year, right? Is there a Kia Soul EV on here? Sometimes you hear people mention that one. Wow. Maybe they stopped selling it or something. Did I miss it at the top? No, that's the EV6. Maybe they changed the name to EV6 or something. I can't keep up with all the automakers. But a very eye-opening chart. I need to start making my own charts on US EV sales only to illustrate stuff like that. So Martin Vieca retweeted that tweet saying more new EVs announced does not equal more EVs sold. So when people tell you the competition is coming, what they mean is the competition has announced that they are also going to sell EVs. Well, look at all these other EVs that the competition is selling. Look how many of them they're selling. They're hardly selling any, right? So Martin's point is well understood by me. More new EVs announced does not equal more EVs sold. You still have to sell them. Announcing them is the easy part. Then you have to make them, which is very hard. And then you have to sell them, which can be hard if you didn't make them very well, right? If the EV product you made wasn't all that compelling, Now you have another problem of, okay, how do we get people to buy these? Next, a tweet from Yashu Sharma. Hey, it's Yashu. Breaking. Ghetto Raul Ligma has been spotted on the streets of Vancouver. So this was Yashu's Halloween costume. Now, I'm surprised it wasn't a box of oranges. It's bananas, but that's still fruit. That's still on theme for Yashu. All right, next a tweet from Brian Feroldi, who tweeted, good suggestion, as a reply to me. What was a good suggestion? Well, let's scroll up. Brian Feroldi began this thread saying, what moves a stock in the short term versus long term? I replied, dividends force unwanted taxes on some investors. Maybe the dividends line should say dividends/stock buybacks. So that was what he responded positively to for feedback. But yeah, look at all the short-term drivers of the stock price. So headlines in the media, right? An activist short seller report, Hindenburg Research might publish a note about your company that would tank your stock price. Economic data, CPI numbers, unemployment numbers, Federal Reserve news, are the interest rates going up or down? We can't predict any of this stuff, right? I mean, if you work at the media doing the hit piece article, you're not allowed to short the stock because you know in advance what's in the article that's about to be published. So it's predictable for you if you work there, but you can't do anything with the information because it's against the law. Insider buying or selling, not predictable. You don't find out until everybody else finds out when, they file the SEC paperwork. Guidance revision, no, you don't get any notice that that's going to happen until it happens. Public investor presentations, you can kind of predict what is going to be in a public investor presentation to some degree or another. So you could anticipate, hey, there's going to be this shareholder event or investor event, so we should trade that to see if we can capture some value off the price movement. Private investor meeting, no, not predictable. Beating or missing estimates. I mean, I do forecast Tesla earnings and then try to figure out if they're going to beat or miss estimates, but I'm not always right about that, so it's not as predictable as I would like it to be. Acquisitions, of course not. That's material non-public information that has to remain a secret until it's announced publicly. Analyst upgrades or downgrades, no. You find out when everybody else finds out. Changes in interest rates, I would say, is kind of with Federal Reserve news, but okay. Government regulation, NHTSA might come down on you, or the SEC might announce an investigation or something that would impact the stock price. Politics, you never know when a politician will take a shot at you, or Congress will pass legislation that impacts your cash flows. Fund flows, sentiment change, yeah, just retail may decide, or Wall Street may decide they like or don't like you. CEO tweets, definitely not predictable. High frequency traders, no. Algorithms, no. Black swan event, no. Something awful could happen and you wouldn't know. Competitor news, no. All right, so that's all your short-term stock price movement stuff. What about the long-term? Revenue growth, yes. You can predict revenue growth. Tesla has been growing revenue every year for a long time and shows no signs of that letting up. Profit growth, yes. Earnings growth do impact the share price in the long term because investors ought to pay more for companies that are growing their earnings more. I hope that makes sense, right? So what kinds of companies ought to have a high PE ratio? The kinds of companies that are growing the E part of their fraction in future years by the most, right? So you're growing into your PE when you're making your earnings double every year versus the prior year. So let's say your PE is an 80 if you're Tesla right now. I bet the PE for Tesla is less than 80 right now. I haven't checked it very recently. So if this year the PE is 80, and then Tesla doubles their earnings, if the price doesn't move, now their PE is 40. The following year, if they double earnings again, and the price doesn't move, the PE is 20. The year after that, if they double their earnings again, and the price doesn't move, the earnings are 10. The year after that, if they double their earnings and the price doesn't move, the PE is 5. Right? So that's the reason why people pay premium for earnings growth. It's because they're investing for the future, not for right now. People hardly ever buy Tesla stock for next quarter's earnings. Who cares about next quarter's earnings? What you ought to care about as a long-term buy and hold investor is, where will this company be 10 years from now? What will their market cap be? And will it be measured in the multiples of trillions? And if it will, then buying today for less than $1 trillion makes sense, which is not investment advice. Do your own research for entertainment purposes only, etc. All right, so that was that tweet that I liked. Next, a tweet from Elon Musk. Twitter's current lords and peasants system for who has or doesn't have a blue check mark is unappealing. Power to the people, blue, for $8 per month, which is actually $7.99 per month. You will also get priority in replies, mentions, and search, which is essential to defeat spam/scam. Ability to post long video and audio clips as tweets, and half as many ads. So Elon is pitching the features of the $8 a month Twitter Blue service, which would be optional. Like, a lot of people are complaining, you can't make me pay that. Well, no, he's not making anybody pay that. It's an option. If you want to buy it, you can. If you don't want to buy it, then you don't get the benefits that come with it, like any other subscription service. And paywall bypass for publishers willing to work with us. That would be a huge annoyance lifted if Twitter could figure out how to get paywalls removed for linked articles, because most people are not interested in signing up to be subscribers to 100 different publications they may almost never read. So that would be helpful. This will also give Twitter a revenue stream to reward content creators, so a way for people who are providing original digital content to Twitter to get some value back from Twitter for producing the content. You know, the product of Twitter is being supplied for free. There's no cost of sales on the product to Twitter apart from, you know, some electricity and some IT and software. So I like those tweets. Next, a tweet from Gally at G. Filchi. This is Galileo Russell. Creator payments is huge to incentivize content creation. Love this idea. And Elon said, absolutely essential. In reply to Gally, creators need to make a living. Hear, hear. I would love to be able to make a living as a creator of digital content, but sadly, I still work a day job, world's tiniest violin, for James's hashtag day job problems. All right, next tweet from Elon. Yes, this will destroy the bots. If a paid blue account engages in spam or scam, that account will be suspended. Essentially, this raises the cost of crime on Twitter by several orders of magnitude. What does Elon mean there? He means if it's going to cost $8 per bot to get a check mark to have their spam or scam tweet replies or messages prioritized high, then there will be a lot less of those bots because it'll become very quickly unaffordable to run a bot army. You know, if bots cost a penny to create and run, then you can afford a 1 million bot army for $10,000. But if those million bots cost $8 per month to run, then your cost of a million bot army is $8 million a month. And almost no one can afford to spend $8 million a month for a bot army, right? Hopefully it destroys, if not all of the bots, nearly all of the bots. Next, a tweet from the accountant at CPA in NYC. FANG versus Tesla operating expenses as a percent of revenues. So this is not profit. This is operating expense. This is the costs below the gross margin line on the P&L and above the interest and taxes lines. So research and development and general administrative costs, marketing and selling costs, advertising, other stuff is in there. So Meta, Facebook, is blowing 59% of every dollar of revenue they make on operating expenses. That is not good, folks. You do not want this. This is not the hallmark of a well-run organization. Amazon, 43% of their... I mean, it doesn't even look real. How could the number be that high? 30% for Google, 20% for Netflix, 15% for Apple, and here's Tesla at 8%. Only 8%, so 8 cents on every dollar is coming from operating expenses like research and development, SG&A, marketing and selling costs, etc. So, yeah, if you had to make an investment decision between these 6 companies based only on this chart, the Tesla investment is the one you would make, right? You shouldn't make investment decisions based only on that information because you don't know what the valuation of the company is. But still, if you knew nothing else, all things being equal, you would invest in the one that seems to be the most efficiently managed. This tweet is unavailable. I don't know what that means, but Frida Gittis. That's why it's so sad watching you play with it like it's a toy and you're a child. And Elon replied, $8. The cost is $8. You can complain all you want, but it's going to cost you $8 if you want to keep your check mark. Holmar's catalog. I love my Tesla Model 3 performance. 0 to 60 in 3 seconds. Full self-driving beta, great software on a Linux-based OS, amazing sound system, fully electric, no gas stations. It's a dream car beyond my wildest childhood dreams. So, I like that tweet. What else was in this thread from Holmars? That one's not mine. Mine's Midnight Silver, but that one looks cool too. It's so fast and fun to drive, your jaw will drop, and the driver assist that's available will just completely blow you away if you haven't seen it. Just go to tesla.com and order one. It takes 5 minutes and you won't regret it. So that was a good tweet, good thread from Holmar's catalog. Here was another tweet along the same lines to AOC. Your feedback is appreciated. Now pay $8. It's only $8, folks. $8. Some have pointed out is what you would pay for a coffee at Starbucks. $8 is a teensy tiny rounding error for most of the people doing the most complaining. Stephen King was one of them. He's worth $500 million. If he were to turn on super followers on Twitter at all, he would have, $8 in a minute and $80 in an hour and $800 in a day and $8,000 a week for starters, probably from Twitter as revenue to him if he would just turn that on. But what can you do? People like to complain. about paying for stuff. Even when they're very, very wealthy, people like to complain about paying for stuff. Next is a tweet from Chris Pierce. That's it. That's the tweet. Delivery complete. So Christmas Pierce got his Tesla Model Y delivered last week, and I said congratulations. So there he is, enjoying his new blue Model Y in Florida. So good stuff there. Happy for Chris to get the 7-seater. I think this is his second Model Y. Yep. So good news there for Chris Pierce. Next to tweet, like if you like Tesla. Well, I had to like that. It was a trick from Holmeier's catalog. I had to do it because I do like Tesla. So he got my like there. Next to tweet from Stephen Mark Ryan, Twitter will remain free to use. This is an important point that is getting overlooked. $8 a month is optional, in all caps. Optional. To enable premium features like account verification, long-form video, and an improved user experience like YouTube Premium is optional and improves user experience by no longer showing annoying ads. If you like to watch a lot of YouTube, it is recommended by me and many others that you buy YouTube Premium because you never have to watch another video ad roll on YouTube. I don't turn on mid-roll ads, but the most annoying ads to me are mid-roll ads. They jump up right in the middle of a video and interrupt and break your focus and your train of thought on that video, and then you watch an ad and you come right back, and it's not like TV where there was a built-in commercial break between scenes or something. You have to get right back into it again after that mid-roll ad plays. So you can kill all of those if you just pay YouTube for YouTube Premium. No more ads, no more commercials on YouTube. Next, a tweet from David Sachs. The entitled elite is not mad that they have to pay $8 per month. They're mad that anyone can pay $8 per month, right? The bourgeoisie are not happy that the checkmark can now be purchased for only $8 per month. That's what they're mad about. Another tweet from Sawyer here. CNBC's Andrew Sorkin in December 2021 to General Motors Chief Executive Officer Mary Barra. It appears by my math that on average, Tesla employees who are non-unionized appear on an hourly basis may be making more money than unionized workers, for example, at General Motors. Yeah, that's true for sure. So if you were working at Tesla in 2017, 2018, 2019, and taking part of your compensation in stock, as I think almost all Tesla employees are eligible to do if they meet their eligibility requirements. So I think it's like some, minimum working time and minimum working hours or whatever the rules are. Then, yeah, they were getting paid in stock that grew in value by 20x. Right, so there's some of them still work at Tesla and are multimillionaires who were working, factory jobs, working assembly at the Fremont plant. Multimillionaires. You don't find as many multimillionaires working at the Hamtramck assembly plant in Michigan that General Motors runs. Even though those are union workers, they are not as well off. They have not been compensated as well as Tesla's workers have been who chose to be union free, right? So the question isn't whether workers ought to have the right to unionize if they want to. Tesla's workers do have the right to unionize if they want to, and they have chosen not to. They were unionized in Fremont under the GM and Toyota-led NUMMI plant, and 100% of them lost their jobs anyway. The union did not protect their jobs at the NUMMI plant, and they remember that. They remember paying dues to a union that did nothing to help them keep their jobs under that old regime that GM was a part of managing. So they have elected now not to be unionized and continue to remain resolute on not paying union dues to a union that wasn't doing much for them. Here's a tweet from Noppenlois. When Elon joined, he was already working on the same project, and all Eberhard, independently wealthy, and Tarpening had was an empty shell of a company with no tech of their own, and not even the rights to their name. And it wasn't borrowed money either. So who's she replying to here? Well, here is the Stephen King tweet. And Brenda, Sadie's niece on Twitter, said he didn't start Tesla. Martin Eberhard and Mark Tarpening did. Elon bought in with borrowed money and was the fourth CEO. Okay, well, one of my favorite things to say at this point to somebody is, what was your favorite Tesla product before Elon joined the company? Which of Tesla's products did you think was the most successful before Elon got there and bought his way in? Oh, Tesla had no products before Elon joined the company? That's right. And the company would have failed before producing any products if Elon Musk hadn't gotten on board, provided that company with enough money to actually grow. They had no sales centers. They had no factory. They had no research and development employees. The company was only Martin Eberhard and Mark Tarpening at their houses, right? There was no Tesla address. There may not have been a P.O. box for Tesla at that point. They didn't own Tesla.com, right? Elon had to send the nicest guy in the company to go camp out on the doorstep of the guy who did own Tesla.com to convince him to sell it for like 75 grand, that of course Elon had to pay for because these other jokers didn't have the capital to surpass the barriers to entry. It is expensive to get into the auto manufacturing business, right? If you want to start selling thousands of cars per year, you're going to need a ton of money to be able to do that. And these guys did not have it, and their company would have gone nowhere without Elon coming in, marshaling the capital required to get the company off the ground and producing their first product, which was the Tesla Roadster, which lost money because this guy was lying to everybody about how much it cost to make, which is why Elon had to come in as CEO. He didn't want to be. He wanted to be focusing on SpaceX, but the company would have died without him coming in and running it as CEO, so he had to. So here's the next tweet that I liked from Navanloy saying that. Eberhard remains CEO, proceeded to run the company into the ground, lied to the board to the point the board member he picked himself voted to eject him, and they were debating whether to file suit against him. Musk saved the company by mortgaging everything he owned and nearly lost it all. He resisted being CEO for a long time, already busy with SpaceX. So, good to see Navanloy setting the record straight, so I liked those replies. Another tweet here from Jim Hall at jhall on Twitter. Big surprise, another news report of China problems based on faulty data. Comparing the first month of a quarter to the third month of the previous quarter is a complete waste of time. This is a record month for China for the first month of a quarter. Al Root, I expect better from you, Dow Jones. So this is a very downbeat assessment. Tesla's China shipments fall as price cuts and COVID create problems. Well, most of what the Shanghai factory was doing early in the quarter was producing for export. So that's usually what's going on in quarters. Yes, Tesla is trying to end the wave, but that doesn't mean it'll be already completely smooth in terms of first month, second month, and third month of the quarter. Probably we're going to see more deliveries in the third month than in the first 2 months for a while. Another tweet from the accountant, Tesla versus legacy. Let's look at operating margins here. This is profit, so more is better on this chart. Here's Tesla. In 2021, Tesla's operating margin was 12.1%, and if you scan across the rest of the page, you'll see nobody else was in double digits. Toyota, Volkswagen, General Motors, Ford, they were all in the mid to low single digits, is where they all were. What happened in 2022? Well, through September, so year-to-date Q3 2022, Tesla's operating margin is 17.1%. Friends, that is triple the operating margin some of these other companies are making. And you can't say, oh, well, sure, Tesla's up, everybody's up this year. Well, no, everybody is not up. It's an even mix of up and down this year. So, good chart there that I liked from the accountant. Sawyer, on fire this week, putting out lots of great tweets that I had to like. Awesome new photo gallery from the Peterson Museum. They will launch their new exhibit in collaboration with Tesla. And yeah, I agree. I'm going to be stealing some of these photos to use on thumbnails for future videos. So, lots of good Tesla vehicle photos here. This is the Model X prototype, so there's only one of these. Cyber Quad prototype, pretty cool. Original Model 3 prototype photos here. Original Tesla Roadster aerodynamic buck, which I've never heard anybody use to describe this. If you know what that means, leave a comment in the description saying what an aerodynamic buck is. Maybe that means it's a clay model and not a working vehicle. Sometimes they call those a rolling mule if there's no powertrain in it. If it can't move under its own power, it's just always in neutral. I don't know what an aerodynamic buck is. 1 millionth Tesla ever built, 2020 Model Y performance. So that car looks pretty great. And here we have the Model S Plaid Nürburgring edition. If you don't know what the heck is happening here, when you racing modify a vehicle, you rip out anything that weighs a lot. Well, I mean, your weight reductions are very extensive, trying to get the weight of that car down as low as possible. Why? Because the car accelerates better when it weighs less, and it brakes better when it weighs less, and you can go through corners at higher speeds when it weighs less. If you've got enough downforce on the front and back of the car to keep contact with the ground on those 4 tire patches. So this is the roll cage that they had to put into the car in case the driver made a mistake, took a corner too fast, went off-road, and rolled the vehicle. This would be for driver safety to make sure the roof of the car doesn't cave in rolling over. And there's the original Tesla Roadster. Pretty great. And there's a link to the Peterson Museum. So I like those tweets in that thread. Here's a tweet from Earl of Frunkpuppy, who tweeted, opening Twitter to see who is mad at me today. The indomitable spirit of Dr. Earl Banning taking abuse from people just for remaining independent, right? I mean, he just calls them how he sees them. Everybody ought to be doing that, right? And people are directing a lot of hate his way for reasons that don't seem obvious to me or Earl. So I like that tweet. Here's a tweet from Christopher Dungeon, at Chris Dungeon on Twitter. Big retail Tesla investor, bullish Tesla signal. Think inverse Kramer, but 100% worse. So here's Scott Galloway with his mental health tip. Sell, period, your, period, Tesla, period. All right, so this guy is he's Prof. Galloway on Twitter because he is an NYU professor of marketing, business marketing. So he has a large following. 508,000 people follow him. He's an author. He writes books. He does podcasts. And he is terrible at valuing companies. Like, he is notoriously god-awful at guessing which companies are undervalued or overvalued. So he's good at marketing himself. He's excellent at self-promotion. He knows a thing or two about how to stir up a crowd. You can see he's got 23,000 likes on this tweet with his mental health tip. But after I left this tweet right below it, like in 2019 when you said we should sell our Tesla stock, I've got 2,500 likes on this tweet. So after this tweet posted, he changed who can reply to only people he follows or mentioned. He does not follow me. You will not be shocked to learn. So yeah, I had to make this graphic for Scott Galloway from 2019, October 4th, right after Tesla had reported the deliveries for Q3 of 2019. He said Tesla would lose 80% of their value or disappear. So this first list, he was just calling overvalued, just, hey, they're valued too high. He saved for his shorter list below that companies that would go bankrupt or lose 80% of their valuation. Well, this was the stock valuation of Tesla on the date that he sent that tweet. And look at what it did after. It did almost nothing but increase in value by about 6x over the following, 2 years. So, yeah, he was... He got the magnitude right, that it was a 5x difference. He got the direction wrong. It was 5x undervalued, not needing an 80% downward correction like he thought. So I think it's important to get that information out there for folks who may not be as familiar with Scott Galloway as I am. But he, like Jim Cramer, is known for making bad calls on stock valuation. And this proof tweet from Chris Dungeon that I also liked was just in reply to that thread, which is how I found it. And the last tweet that I liked this week came from the Short Shorts historian, who always gets a mention in this video series, This Day in Tesla Q History. Oh no, Ulrich deleted his account. Wanted to ask if the book is for sale already. Ulrich Bensing, 3 years ago. All right, it's official. I am writing my first book about the capital markets. It will have one chapter about Tesla. I will name the chapter Plain Scam in Plain Sight, the Tesla Story, and the Mystery of the Missing Feds. Hashtag Tesla, hashtag Tesla again. Hashtag Tesla. So maybe not the maybe not the best aged tweet on Twitter. All right, so that is the end of my video. Let's check back in with Loki and see how he's doing. Well, he's changed positions, but he is still down for the count. So with that, I will return to my outro screen and say, if you've enjoyed today's video, click the like button. Be sure to boop that like button. And if you're a Patreon supporter of mine, you're probably already subscribed to my YouTube channel. But if not, there is a subscribe button over here. And you can join my YouTube channel as well if you haven't done that. There's a link in the video description. And if you're like Kathy Kitchler and you want to support me at the top tier level, because that's how much value you find in what I'm putting out there, there is a SpaceX Edition Roadster tier you can join and have your name thanked at the end of all my videos, just like I always say thank you to my executive producer, Kathy Kitchler, and I will see you in the next one.